Good morning, Steve in Chicago with the morning grain comments. Well, Tuesday is a day in which we try to figure out all the numbers that comes out from the USDA on Monday. Markets and the grains are higher overnight. I think the number one thing is the USDA dropped corn and soybean crop ratings more than people had anticipated. One private crop watcher has lowered his corn yield to 178, but kept his bean yield in the U.S. at 52. So the drops were mostly like in Iowa. There was also some declines in Michigan and also maybe South Dakota as far as some of the corn crop there. And then Ohio continues to be rated below average. So that I think offered support. There was also talk that China was an aggressive buyer of U.S. soybean cargoes for November and December yesterday during the trading session. And finally, there was a surprise talk between the U.S. and China concerning the Phase 1 trade deal. And it kind of gave a little optimism to the market that they could continue to buy U.S. soybeans and maybe come in and buy U.S. corn and maybe a little bit of U.S. wheat. We'll be watching today to see if there's any daily announcements of that. We also noted that from a weather standpoint, it's hot and dry across the Midwest. And yesterday noon, there was some concern that the Hurricane Laura, who's supposed to hit the Gulf Coast late Wednesday, Thursday, those rains may stay in the south and in the Ohio River Valley and may not get up into the Midwest, especially the northwest part of the Midwest, South Dakota, Minnesota, and Iowa. Today the maps are a little bit more aggressive, at least in the southeast part of Iowa and all of the eastern Midwest. But early next week, we expect a cold front to come down out of Canada, providing rains for much of the Midwest and cooler temperatures. So again, if you're a bear, you probably want to focus on that rain event as a top in the marketplace. And if you're a bull, you're just kind of trying to figure out, okay, does China and the weather offset the reduced demand because of COVID? I kind of thought that farmers should increase their 2020 and 21 cash sales, corn, beans, and wheat on this rally. For 2021, if we're starting here and this is the lowest price you get for 2021, that's a pretty good value compared to what we've seen since March. So again, dropping crop ratings, we'll be watching about China demand. Conversation about Phase 1 trade deal might be supporting the market. Funds continue to add to their soybean long and take off their corn short. And I think farmers should take advantage of this and sell 20 and 21 cash. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.